What records do you need to be sending to your accountant as a property company? Hi, I'm Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. You work with an accountant and you need to do your year-end accounts, but what do you actually need to send to them? Now, I know I get asked this question all the time, so I thought I would do a brief video to really just cover off what you need to be sending to your accountant to give them all the information possible to hopefully get a good set of accounts when you sit down for your draft accounts appointment. So let's start at the top and work our way down on what is the different things you need to be giving them access to. So the first thing to mention today is really if you're using some sort of software, so things like Hammock or QuickBooks or Xero, those sorts of software, make sure you give your agent access to these softwares. That means that they'll be able to see in, pull off different reports and get that data into their accounts preparation software to get a good set of accounts together. Now, if you're not using software just yet, which may not be right for everyone, you may be hopefully using some sort of spreadsheet to collate your information. Please do check out the channel for some of the software options to find out what may be the right option for you. So if you're using your spreadsheet, make sure you send a spreadsheet over. If you're just using paper, then send your paper over. But I know most accountants these days are tending to move away from paper documents these days. So try and get digital where you can so that you're ready for making tax digital. Following on from your records, we now probably want to jump onto some of the backing documentation. So things like your bank statements, they'll probably want to see at least the last one, if not some of the other ones, just to make sure everything tracks through and reconciles. And the same if you've got any business credit card accounts. If you're using a personal account to pay for business expenses, make sure your accountant is aware of that so that you can ensure that all of these expenses are properly accounted for. In this case, you'll need to be doing expense claim forms and make sure you've done your expense claim forms for the year and they have been submitted to the accountant so that they can ensure that these expenses are allocated to you, your director's loan account, if you have not actually taken the cash back yet. Now, as we're talking about a property business, the one thing I would potentially expect to be saying is, are you buying properties or selling properties? And if that's the case, if you're buying properties, you're going to have your completion statements and maybe your mortgage offer to show what you've agreed for your mortgage, or maybe a bridging offer of what your funding side of things looks like. So you'll need to send your completion statement, your mortgage offer or your bridging offer, which shows all the different costs that are incurred on that transaction. And this way it makes sure all of your charges, all of those product fees and all those sorts of things are properly taken into account. If you're selling a property, it may be similar sorts of things because you're still going to have a completion statement just from the other side of things rather than the buying side, you're the seller. Also, it may be that you've got documentation on the final payments to your mortgages or your bridge as you're clearing these off when you sell the property. So again, you just need to make sure you've got the appropriate documents so that your accountant can understand exactly what has been happening with that transaction. Now, as you have properties, you have loans, you'll probably get your mortgage loan statement as you go through the life of your property. So each year you need to send them your mortgage statement, which may not be in line with your company year end because it just never really is. So I'd always tend to say send your most recent mortgage statement that you've got so that they've got the up-to-date picture and then they can do the appropriate calculations as necessary. If amortised cost calculations need to do, they've got the information, or they can make the decision that something may not be necessary as appropriate. If you've gone through any refinances during your accounting period, you'll need to send your completion statement for your refinance. This is quite crucial because it'll tell your accountant exactly what has been cleared on any loans, and then it'll tell them what additional fees and what other expenses have been incurred on that new loan. For the income and expenses side of things, then you'll possibly need to be sending your letting agent statements. Now, the reason for sending them is because it will show the gross income that you are getting from the tenant, so maybe the £800 per month or £1,000 or whatever it may be, and then it will show the managing agent's fees that they're deducting and any other expenses that they've deducted. So if they're dealing with repairs, if they're dealing with the gas certificate and those sorts of things, your EPC renewal, your electrical certificate, then it will show all of these expenses on your letting agent's statements. From a purchaser side of things, it's really any purchase expenses or receipts that you have got, things like your insurance, all those bits, any information, send them over to the accountant so that they can track any expenses as necessary as they're pulling things together. If you have a payrolling company, then you'll need to send your accountant your payroll records if you're doing it yourself. If your accountant's doing it for you, then they should have that data already available to them. But if you're doing it your own, make sure that you just send over the appropriate reports. As an investor, we obviously do viewing trips. So if you are going out viewing, if you're going to the bank, if you're going to networking, if you're going to conferences and things like that, then you are going to be doing some sort of mileage. So make sure you let your accountant know what mileage you've done for the year, complete your expense claim forms, check out the video on that if you're not sure how to do them, and then that will just detail all of the different mileage you were claiming through the company. Even if you can't quite take that money back out of the company just yet, it's a way of making sure you're tracking that expense and getting the corporation tax deductions as you go along. If you have any rent arrears, then make sure you let the accountant know, and then they can put in the appropriate provisions or bad debts as appropriate to get rid of some of that income that you're never going to get or you might not get, and hopefully look at just reducing your corporation tax bill for the current position. And if you get it, you'll pay a bit of tax, but you've not paid anything you don't need to when the tenant hasn't paid any rent at this point in time. And the final thing to just mention on our video today is have a think about what your properties are valued at. For certain company accounts, we can revalue your properties. So check out the company accounts videos to find out which ones you can and you cannot be using revaluations of property on. However, if you are one that's doing small company accounts, you'll be able to revalue your properties. So if you've just done a refinance or finished a refurb, you may be looking at a revaluation, and make sure you have a look at that and speak to your accountant about it to ensure you have the correct valuations in your company. As you can see, there's quite a wealth of information that you potentially need to be sending over to your accountant to ensure that they've got the full picture of how everything fits together. One thing I would recommend is that you do actually do a bit of a summary sheet, which just tells them what strategies you've been operating, how you've been running your business, so that they know exactly what they are dealing with as they get the information, and they can make sure that they collate a good draft set of accounts and hopefully then have a conversation with you to see if there's anything else you can do to make sure that you're as tax efficient as possible and also get the right set of accounts that are going to be heading onto Companies House at a certain point in the probably near future. One thing I would say is don't leave things till last minute. Try and work with your accountants, and probably after 2-3 months after your year end, try and collate everything and get it over to them. It gives you both time to prepare them and ask any questions, so that hopefully you get a good set of accounts, you keep your tax to a minimum, and you're not rushing to the deadline and trying to get everything finished last minute. Hopefully today you've discovered exactly what you need to be sending to your accountant. If you have any questions, please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.